Are you ready for the biggest trade war showdown in history? This isn't just another economic skirmish, it's a full-blown confrontation that could reshape the global landscape. The stakes have never been higher, and the players are the world's two largest economies, the United States and China. What started as economic tension has now escalated into a full-blown trade war with global ripple effects. Just hours after the United States imposed a massive 104% tariff on Chinese goods, China has fired back with its own punch, an 84% tariff on all goods imported from the U.S. The new levy, up from 34%, was announced by China's finance ministry and is set to take effect at precisely 12:01 a.m. Beijing time on April 10th. This wasn't just a symbolic move, it was a clear signal that Beijing is not backing down. The retaliation has already triggered chaos in financial markets. European stocks, which were already feeling the pressure, tumbled even further following China's announcement. The UK's FTSE 100 dropped 3.3%, the German DAX fell by 4%, and France's CAC 40 also plummeted by 4% in early trading. Investors across the globe are scrambling to reassess their positions as the fallout continues. This dramatic increase in tariffs from China marks a serious escalation. It's a gut punch to American exporters who depend heavily on access to the Chinese market. For many U.S. companies, this could mean millions, if not billions, lost in potential revenue. And we could just be seeing the beginning. With China promising resolute countermeasures, more actions are expected from Beijing in the days ahead. Interestingly, Chinese state media has also taken to social media to ridicule other countries that are pleading with the U.S. to lift the tariffs. They argue that such efforts only play into President Trump's strategy, which Beijing describes as aggressive and unilateral. China, on the other hand, is presenting itself as a champion of multilateral trade, where global rules are respected and applied to all. That message is resonating in parts of Southeast Asia. Countries like Vietnam, Cambodia, and Thailand, who have all been hard hit by U.S. tariffs, are watching closely and showing sympathy toward China's position. Meanwhile, President Trump has responded in typical Trump fashion, bold and defiant. Taking to his platform Truth Social, the president encouraged American companies to relocate back to the U.S. He described it as a great time to move, touting zero tariffs, fast energy hookups, and no environmental delays. His message was loud and clear: don't wait, do it now. But this trade standoff isn't just between the U.S. and China anymore. The European Union is also stepping into the ring. EU officials are reportedly preparing a new round of counter-tariffs, including a 25% tax on American-made motorbikes, luxury boats, and even orange juice. The EU seems to be bracing for its own battle with Washington, as Trump hinted at further tariffs on pharmaceutical imports from European drug makers. That news caused shares in European pharma companies to dip almost instantly, and it doesn't stop there. Trump recently declared that countries are dying to strike deals with the U.S., claiming that world leaders are calling and, in his words, kissing my ass. The bravado may play well to his base, but globally, it's creating tension and uncertainty that's rattling markets and businesses alike. Despite the tough talk, the UK is trying to stay optimistic. The Bank of England has said Britain is relatively well positioned to withstand the economic shock, although it also warned that significant risks remain. The British government maintains that a US trade deal is still on the table, and they're confident about securing it. But the bigger question now is, how far will this go? Each side is ramping things up with no signs of backing down, and with every tariff announcement, the risk of a global recession inches closer. This isn't just a diplomatic spat anymore, it's a high-stakes economic war with the potential to impact every corner of the global supply chain. The US-China trade war isn't a recent phenomenon. It has deep roots that stretch back decades, with both nations vying for economic supremacy and global influence. The seeds of this conflict were sown long ago, as the two countries' economic models and political ideologies clashed on the world stage. It's been simmering for years, fueled by a complex web of economic and political tensions. The trade relationship between the US and China is one of the most significant in the world, with billions of dollars in goods and services exchanged annually. However, this relationship has been fraught with challenges and disputes, leading to a fragile and often contentious partnership. The US accuses China of unfair trade practices, intellectual property theft, and forced technology transfers. These accusations are not new, and have been a point of contention for many years. American companies have long complained about the difficulties of doing business in China, citing issues such as market access barriers and the lack of a level playing field. China, on the other hand, argues that the U.S. is trying to contain its rise as a global power. Chinese officials claim that the U.S. is using trade as a weapon to stifle China's economic growth and maintain its own dominance. This narrative has been a rallying cry for Chinese leaders, who see the trade war as part of a broader strategy to undermine China's development. The Trump administration, known for its aggressive trade policies, has repeatedly slapped tariffs on Chinese goods, hoping to force concessions and reduce the trade deficit. These tariffs have targeted a wide range of products from electronics to clothing and have had significant impacts on both economies. The goal was to pressure China into changing its trade practices and opening up its markets to American businesses. This trade war has been a game of brinkmanship, with both sides escalating the conflict in a dangerous game of chicken. Each side has tried to outmaneuver the other, using tariffs and other trade barriers as leverage. The stakes are incredibly high, with the potential for significant economic damage and disruption to global supply chains. Each round of tariffs has been met with retaliation, creating a vicious cycle of economic warfare. The back-and-forth nature of these actions has led to increased uncertainty and volatility in global markets. Businesses and consumers on both sides have felt the impact, with higher costs and disrupted supply chains becoming the new normal. And now, with China's latest move, the stakes have been raised even higher. The latest round of actions and counteractions has only served to deepen the divide between the two nations. As both sides dig in their heels, the path to resolution seems increasingly uncertain, leaving the global economy hanging in the balance. When you look at the trade imbalance, it's tempting to think the US has the upper hand. For every 5 goods China sells to the United States, the US only sells 1 back. That might suggest that China has more to lose, but it's not that simple. These tariffs don't just hurt exporters, they hit consumers too. And American shoppers are now staring down the barrel of higher prices, limited product options, and potential supply chain delays. Chinese companies will take a hit, no doubt, but so will US small businesses and retailers who rely heavily on Chinese imports to stock their shelves and keep costs down. As the tariff battle rages, China is also tightening restrictions on US firms beyond import taxes. Starting tomorrow, 12 American companies will be added to China's export control list, meaning those businesses may now need government permission to send goods out of the country. On top of that, 6 US companies, including several involved in AI technology, are being added to China's so-called unreliable entity list. This list acts as a sort of economic blacklist, and being on it means restricted access to the Chinese market. In addition to all this, China has already filed a formal complaint with the World Trade Organization, accusing the US of violating international trade laws. The move underscores Beijing's strategy to counter US tariffs, not just with retaliatory measures, but also with legal and diplomatic pressure through global institutions. So where does this leave us? On one hand, we have a US administration that's going full throttle on tariffs, using trade policy as a political and economic weapon. On the other, we have a Chinese government that's equally determined to stand its ground, even as it risks economic slowdown. The danger here isn't just about 2 superpowers duking it out, it's that their battle could drag the rest of the world down with them. Investors, exporters, manufacturers, and consumers everywhere are now caught in the crossfire of an escalating conflict with no clear end in sight. And here's the bottom line. This trade war is no longer about economics alone. It's become a contest of willpower, influence, and global dominance. And now, Canada has officially joined the fray. While Canada hasn't been directly targeted by Trump's sweeping global tariffs, the country has been hit hard by tariffs on automobiles, steel, and aluminum. In direct retaliation, Ottawa has rolled out its own set of tariffs, this time on vehicles imported from the United States. Interestingly, Canada's countermeasures avoid auto parts and Mexican components, showing a strategic attempt to minimize domestic economic fallout while sending a strong political message. This isn't just a policy debate, it's personal. A recent poll conducted by Ledger revealed that 57% of Canadians feel angry about Trump's latest tariffs, while 33% of Americans expressed the same sentiment. Anxiety is also rising. 32% of Canadians and 27% of Americans admitted to feeling anxious about what's coming next. Meanwhile, the futures market isn't offering any comfort. Predictions point to more losses for US stocks when trading resumes, with global markets already in retreat. Asian and European exchanges are both down, reacting swiftly to the 104% US tariff on Chinese imports that just went into effect. This is not just a trade dispute, it's a high-stakes global standoff. From Washington to Beijing, from Ottawa to Brussels, the economic chessboard is being reset. No one knows exactly how this ends, but one thing is certain, the world economy is now on edge, and the cost of this conflict could be higher than anyone imagined. As the financial scandal unfolds, public outrage is mounting, people are demanding answers, and trust in the system is at an all-time low. It's a critical moment for accountability and transparency. So let me ask you this. Which country do you think will blink first in this high-stakes standoff? Will Trump's pressure tactics force China to the table, or is Beijing prepared to ride this out, no matter the cost? Drop your thoughts in the comments. I'd love to hear what you think. If you're looking for more stock tips, exclusive analysis, trade alerts, and free investing guides, come join the Stocks Galore Patreon community. That's where we dive deep on everything I talk about here and more. Head to patreon.com/stocksgalore or click the link below to become part of our growing team of smart investors. Thanks so much for watching. Don't forget to like the video, share your thoughts in the comments, and subscribe to the channel for more updates like this every day. And remember, knowledge is your best investment. Stay smart, stay informed, and I'll see you in the next one.